Hi everyone, good evening, welcome back. This is a continuation of my market update series which started on 28th of July 2025. So, July 2025. From here, we have started our analysis, right? So, every Monday evening, I share updates on what the market has done in the past week and what we can expect in the current week. So, this is the analysis what we are making from last 28th August, 28th July. Okay, let's see today where the market will move based on the previous development. In last week video, we discussed that this is the demand zone and the low and the high. This is the demand zone. So market has to break on the either side, either upside or either downside. And the targets are as discussed. These are targets 24,500. So 25,000, and the downside is 24,000. So this was the expectation what we had. On Monday, when we made the video on the 11th August, market couldn't able to break the low and it has moved violently on the upper side. And Tuesday it got retraced. On Wednesday, the market has gone inside to the nearby the demand zone. So it has given clear instruction that the market will not ready to break on the not ready to move on the downside. Based on that, we have built our positions to take this target. To take this target, we have built the positions. But unfortunately, today, Monday, the market has given gap up and this target has been given in a one day itself. So this was not our expectation or in our analysis. This gap up is not, this gap up should not happen today, but due to the market, global market, the gap up has been given. Because why I'm saying is, say in India, today the volatile index is about 12.5, which is favor for sellers. So whenever the volatile index is below 13 or 14, the gap up and gap down usually not happens. The gap up, gap down, gap up or gap down will happen during the period where there are event. Example, the RBI policies or any election results. So in that scenario, the gap up and gap down happens because the volatile index will going to shoot up. So at that time, the gap up gap down will be there. That time, it is a favor for buyers, I can say. When it is in 12 less than 14, then it is a favorable only for the sellers, not for the buyers. So this analysis based on that, we didn't expect this gap up, but due to the global market, the global market indication, based on that the market has got gap up and it has given the target. But what happened, we need to see what's here. See, this is the target zone what we have marked in the last video itself. This was a target zone. After giving this target, the market couldn't able to move any other further directions. It had developed here itself and it's completed the target within the day range. Within the three candles what it has found, within the day range, within the three candles, the market has been completed. So what next? So the target has been given. So what will the market, what we can expect in the market in the coming days? So we are expecting market to get retrace about 24,850 to 24,800. So this point it can get retrace, and if we see any fresh buyers at this point, and if market get reverse, then we can expect about 25,300. So we'll mark this point 25,300 from year to year. We can expect this one. We'll take another arrow. We'll take this arrow. Yeah, 25,300. We can expect this one if that fresh buyers are found at this point. If the buyers are absent, then we can see the gap filling up to this point. After doing gap filling, we are expecting that market has to take the support at the break even where the break has been made on the Friday. I mean on the Friday where it has given accumulation, a small accumulation. Till up to this point, the market has to give support and it has to move in the sideways, and the market has to complete within this range itself. And in the coming Friday, up to Friday. Based on that, we can plan the further on Monday. Based on the Friday's closing, we can plan where it's going to move. It's going to move on further upside or further downside. If the direction, the overall in the bigger scenario, bigger market in a bigger time frame, the market is in the bullish. This was I'm saying from last 3 weeks. So this is a kind of retracement. The market has been given. The retrace has been completed. Now it is going in the direction side. It's the original direction. So if market makes support at this point, then we can target the 25,300, again 25,500 and 25,600. If fails, then we can see the market will be in the sideways within this range. Within this range, it may sorry, within this range like this. Market may move like this and go like this. Okay, it may go like this. So this kind of pattern we can see in the further days. If any if you get any confirmation on the downside, then we can see that if any confirmation given in the this week itself, based on that we can say that market will going to move on the downside. But as of now, there is a no confirmation that market will going to move on the downside. It has a strong support at the demand zone, and it has been confirmed by doing accumulation over here, and it had given a breakup. And this gap filling may happen if if the buyers are absent at this point. This gap filling definitely going to fill like this gap until it has to move the market on sideways, then it has to rally on the upper side. So this expectation, let wait for a another 3 to 4 trading session. On Monday we can see what it will going to in which direction it will going to take up. So this analysis of this week and expectation on the second week. So overall, we are still following the bullish structure. Both the reactions around 24 will tell us if the bias remains strong. If the market will cool off into the sideways, otherwise in a range itself. So this analysis, and if you are able to follow my analysis, kindly give this video a thumbs up and a comments below. If there is enough interest, I will make a separate video on how to analyze the market structure step by step. And thanks for watching. And if you found this useful, please share with your friends. We'll see you on next Monday with market updates. Thank you all.